This is Apple stock on the monthly chart, and you can see this down monthly trend line, which was breached and closed above back early this year. However, price was on the verge of retesting the bottom of that line. When you scroll down to the weekly chart, what you can see is that price is now respecting this downtrend line as price is making lower highs and lower lows. Also, price closed below the weekly buys low at 173 after it held a couple of times. Now, reason for the green week, well, a lot had to do with the overall stock market and Fed Powell more than likely holding U.S. interest rates. But Apple reported their fiscal fourth quarter this past Thursday. They beat analyst expectations for sales and earnings per share, but revealed that overall sales fell for the fourth quarter in a row. Some pundits on Wall Street suggest the company may not return to growth in the important holiday quarter. So it was a mixed quarter, but what does Jim Cramer think about the quarter? Let's check out this video.
Then there's the Apple the analysts know, and never the twain shall meet. After last night's quarter, I find it so odd that nearly all the analysts are focused on the growth of China, phones, Macs, and wearables. Because my focus is on the quality of the phone itself, the sky-high level of customer satisfaction, and the amazing service revenue stream that just keeps growing and growing. The analysts look at the degradation in gross margins for the iPad. I look at all the new services people are signing up for, where you pay automatically and don't even notice after the first of the month, and of course, nobody defaults. They look at how Apple seems static with just incremental growth. I look at it as an ecosystem of 2 billion active devices, all of which are candidates to upgrade to the latest and greatest models for all of the company's offerings. The analysts want to trade Apple like it's some sort of live hand grenade. I want to own it and not trade it. That's the mantra of the members of the CNBC Investing Club. They know it all too well. Oh, and maybe this matters. For years, I've been right. And the analysts, wrong.
They know nothing!
Right down to the results from last night. Apple stock, which is up 36% for the year, shows that my way of looking just may be more rigorous. Most analysts are trapped inside the four walls of the spreadsheet canvas, so they end up missing the forest of the trees. Maybe I'm a postmodernist. Given that Apple's the largest company in America, it's important to figure out why these analysts and their often lapdog journalists stay so negative. And let's be very clear, whether we're talking about analysts or commentary, it's very negative. I think it has to do with, quite frankly, a lack of imagination. The analysts are simply looking at product lines and how they sell versus how much they thought Apple would sell them, and then making a judgment that says Apple's coming up short, especially if margins are a tad weaker. They find lines that they regard as inexcusable, like a slowing in non-major city or China. Despite the fact that Apple actually gained handset market share in a country that's challenged beyond all reason, they pick on the fact that the iPad and Mac had weaker numbers versus last year in China, leaving out that last year had more selling days and a one-time bulge in product. Boy, I think that's a very limited way of thinking. So I choose to focus on Apple's having all-time levels of growth in gigantic countries like India, Brazil, Turkey, Vietnam, Indonesia, Philippines, Saudi Arabia, and even Canada. The natural progression of new Apple buyers is to go and buy the product, then pay for all sorts of extra services. So each new user should be viewed as a lifetime customer who will continue paying Apple for additional products and services. By that dimension, the stock is actually inexpensive. This quarter, the service revenue was almost equal to what they get from wearables, the iPad, and Mac combined. So why the heck the experts put more emphasis on the hardware? Makes no sense, especially when you remember the service business has huge gross margins. $1 of service revenue is much more valuable than $1 of iPad revenue. It seems crazy that they downplay the strength of the services business because I think that's business the analysts can't seem to get outside of themselves. They can't admit that Apple is what I call sui generis and insist that it may be measured like any old company. Unless and until they admit it and stop trying to make this Apple into an orange by comparison, I think they'll always be wrong about Apple. They don't look at their iPhones, they all use them, of course, and realize that they'll have to be pried from their cold, dead hands before they'll be taken away. That's the stuff that high-priced earnings multiples are made of. Until these analysts understand that there are 8 billion people in this world, and every one of them may end up being an Apple customer, one way or another, with the lifetime value of each customer potentially worth thousands of dollars on average, then they'll never get why Apple's a winner. But that's great for you, great for me, because it means you'll keep getting opportunities to buy this ultra-high-quality company into weakness. So you, too, can own Apple and not trade it.
Now, this is the daily chart. Again, you can see the lower highs, lower lows taking place. And the only way that this trend down gets invalidated is if price takes out the most recent pivot high, which is possible. Again, I think definitely the bottoms are potentially in a stock market, and what that means is that you're going to see a risk off environment. You also have the possibility of a Santa Claus rally. So over the next 2 weeks, it'll be interesting to see if price can close above the downtrend line, also close above the pivot high. I do have a target at 185, and I should take off this weekly buyer's zone, but I'm going to leave it on for now. Price is also worth noting above the 200-day moving average after dipping below it for the first time in many, many months. You had to go back to March of this past year. So, yes, sales continue to decline, but people love their iPhone, and Apple is a great barometer of the overall stock market. It's a decent percentage on the Nasdaq and the S&P 500. So we'll see what happens over the coming weeks. Thanks for watching. Subscribe. Please like the video.